Hey there, welcome to the My Risk Advisor podcast. This podcast is for anyone in the financial planning ecosystem with a focus on life risk insurance. I'm your host, Phil Thompson, Director and Financial Advisor at Sky Wealth, and I've been on a business journey over the last few years going from a struggling holistic advice firm with one staff member, considering packing it all in, to pivot the business now to being one of Australia's leading specialist insurance advice firms with over 7 advisors, 30 team members, and helping hundreds of clients every single year get important insurance cover in place. I am unashamed to say that this podcast is so I can continue to grow and develop as an advisor and a business owner as I interview some incredibly smart individuals. So keep on listening so you can learn alongside me. Today with me, I got Ben Donald, from Managing Director from Austbrokers Life. Thanks for jumping on, Ben, and joining me for this chat.
No worries, Phil. Pleasure to be here.
Let's just start off. Help me understand your advice journey today. How'd you get into advice? What have you done? What's your journey been like?
Yeah, sure, mate. Life was good fun for me. I graduated uni, and in my second last year of uni, my sister offered me a job in a one-man band financial advice practice in Toowong in Brisbane. And so I started there, moved up into a full financial planning role through various companies. And I think I really came into my own, realizing that risk was where I wanted to specialize, and joined Austbrokers maybe 12 years ago, I think. Time, as you know, is sort of a blur after COVID. And for the last 12 years, I've been working in life insurance, specializing in it, loving it, and working primarily with general insurance brokers and other referrals, and just growing in leaps and bounds professionally and personally. I love the industry.
Great. So help me understand Austbrokers. So Austbrokers is a general insurance broking network?
Yeah, I guess the easiest way to explain is basically just pretend it's a franchise. It's not, but just pretend for a second. So we have about 40 to 50 independent businesses, all affiliated or connected in with Austbrokers, that have a shareholding with the publicly listed entity AUB Group. So we all share the same name and same group in some way. And within that group, I'd say all of the businesses except ours have some sort of exposure or are mainly led by general insurance. And that's the foundation of the company, is general insurance brokerage. And we exist effectively as the sole entity within that group that specializes in life insurance and has no exposure to general insurance. So I guess we're a safe pair of hands because we're part of the family. We're not a threat. We're not competition or anything like that. So we're the trusted referral people for life insurance for quite a number of the partners around the country.
And do some of the GI brokers, they also are in life insurance, or is it basically they don't want to do that, so they refer it all out?
No, so maybe about 6-7 years ago, there would have been quite a number of general insurance businesses that had their life insurance business as a subsidiary and had it sort of as a closed referral loop. And between here and that time frame, we've effectively, I guess, merged in with a lot of those practices. So now that we've maintained our independence, and there'd be maybe 3 or 4 practices around the country that have life, but we'd be the only one that has life as a sole specialty.
Yeah. And help me understand, do you do holistic advice at all?
No, so we're risk specialists. We have a small financial planning division, but it's not massive. And we had a big one maybe 5-6 years ago, but we divested of that. And so we specialize in life insurance. There's very little fun, very little financial planning whatsoever. We work with quite a number of financial planners that don't want to do risk. And I imagine a lot of people listening to this podcast and a lot of the specialists around the country are sort of, I guess, thriving the opportunity where a lot of financial advisors don't want to do risk.
Yeah. I mean, I talk a lot about that. There's a huge push. I don't know if it's because I'm just diving into that specialization that I'm seeing a massive uptick in advisors basically say, hey, get this risk off my books, and I don't want to do it. So are you seeing that as a trend, or is it just because I'm kind of quite new here?
No, mate, it's definitely a trend. In the last sort of, I think, 4 years has accelerated quite a lot, and we've got a lot of advisors approaching us with risk portfolios that effectively say, look, we don't necessarily do the best job in managing this. We want to partner with somebody who specializes in it, who's got scale with the insurers, who's got a claims manager, all that sort of thing, so we can provide a better level of service to our clients. And that's a really strong proposition. What sort of started happening in the last year as well is financial planners have approached us and said, hey, we're looking to acquire a business. The business that we're looking to acquire has risk in it. We don't want it. Can we partner with you, and you purchase the risk aspect of the business? We'll purchase the financial planning, and we'll then go into a sort of a joint arrangement to manage those clients.
Yeah, great. So, I'll talk about Austbrokers Life. So I want to talk about Austbrokers, the whole network. So
Yep.
within Austbrokers Life, what does that look like in terms of your team?
I think we're about 10 advisors and about 15 support staff with, I think, maybe 3 overseas at the moment.
Cool. And have you guys seen a big growth in your advisor numbers over the last few years?
Not as much as I would like. Like a lot of people on this podcast, I think good help is hard to find. And so we've had basically open positions for I think at least the last 3 years, where any risk advisor that's looking for a new home is welcome to have a chat with us, because there's plenty of opportunity out there that we can make it work.
Yeah. I think every specialist firm is always hiring. I have a chat to JR in your team, John Rigetti, and we're always talking about how do we bring on new team members? Where do we find them from? We're always talking about how to find good team members. Cool. So you got 10 advisors. What does the support team look like?
So we work in a pod structure, right? So you've got an advisor who's got a direct support member. And the idea is that they, I guess, within the confines of the systems and the processes, they obviously develop a strong working relationship where they sort of understand each other a little bit better and can get through work faster. The idea of that pod structure also means that the client's got multiple contact points with our business, not just the advisor themselves. And we're seeing quite a lot of benefit that come through that, especially on later years of policy, so renewals and whatnot, because the client's comfortable just engaging with the support person for administration tasks, like things like updated address, bank details, all the things that don't necessarily need to have an advisor involved, because the support person has been part of the advice journey. There's a high level of comfortability there.
Have you thought about pooling your support staff resources? So there's a group of support staff that work with multiple advisors. Have you gone down that path in the past? And
yeah, so the pod structure that I was talking about, right? So every advisor obviously works within the wider group of advisors. We engage with each other. But for the support member, they work directly with an advisor, but there's also a secondary support. So the support almost work in their own pods as well. And what that does is helps with people going on leave, increased workloads. If somebody's got an influx of SOAs or something along those lines, then it helps for our CSMs to work in their own individual pods as well. So I guess if you want to sort of visualize it, top layer of advisors and then individual CSMs underneath those advisors, and then the CSMs have their own pods amongst themselves. And then underneath those CSMs, we have offshore and onshore administration processing.
Those CSMs, are they working, is there 2 CSMs per advisor, or is there's 2 advisors, both with 1 CSM each, but they kind of will pair up?
Yeah, that's correct, yes.
Yeah, and how many people offshore do you guys have?
3 or 4, I think. We're looking to expand that as well. Yeah, we partner with virtual business partners on that.
What's been the hardest thing about starting to delve into offshoring, and what's been the best bit about it?
Hardest part would be, I guess, it's a realization for yourself of how much work you have to do on your own processes, so that somebody else can pick them up who's potentially new to the industry that doesn't quite know what they're doing. So making sure that those systems and processes and your threads and your explanations of tasks are fully articulated in a way that anybody can pick them up. So that was quite a challenge for some of our team, because, some of the response that we have internally at the moment is, well, just get it done. And and if you're talking to someone who's got 10 years, they can do that. But somebody who's brand new, obviously have to spell that out. And then the natural learnings when you're in the office with somebody doesn't exist. So it sort of doubles down on the importance of that really, really thoroughly outlined process. So that would be the biggest challenge. Yeah, the biggest win, obviously there's financial wins there, but I think the biggest win would just be the release of capacity. So the idea would be that as our technology improves, as our team grows, that team overseas can continue to increase the capacity of our CSMs to do higher level tasks, and then increase again our advisors to the point where they're only engaging clients directly and not doing any admin work.
Yeah, I think one of the secret wins when starting to offshore is, we've got a decent sized team overseas, and every time I get advisors ask me, how do you work? What do we think about? I always give them the advice of, if it's not working, most of the time it's probably you and your business that doesn't have the processes in place. Yes. If, on the odd occasion, it can be the individual that you hire. They may just not be suitable, it may not work, but always look internally and go, hey, how do we make this work through bettering our processes? And I think that's the big ultimate win is it forces you to have good processes. If you're not sitting next to someone being able to ask a question 10 times a day, well, then the business has to build processes to, basically answer all of those questions bar one or two. So that's the real big win I see in a lot of businesses. Well, that was a big win in my business was just basically it forces us to have better processes.
Yeah, I agree, mate. The good thing is as well is you generally only got to learn that lesson once at the start of it, and you get through that sort of 3 months worth of pain, and the upside on the back end of that 3 months is actually quite powerful. And I'd agree with you as well on the strike rate. So I would say, let's say of all the people that we interview, we hire maybe 50% of them. It's probably higher with virtual business partners at the moment. So of all the people that have started, I think we've maintained 70-80% or something along those lines.
Yeah, good stuff. And so help me understand the scale of Austbrokers Life. So in terms of like client numbers, premiums under management, what are the kind of metrics that you guys,
Yes, so we have 8,000 clients, about 50 million of premium, and our clients range in type from the newly self-employed tradie who's contacted a general insurance broker to make sure that he's got his tools insured and just needs some basic income protection to get on site, something like that, all the way through to some of the ASX listed firms and large internationals that are after big group insurance. The metric that I really want to talk about, and the metric that I would encourage every advisor to talk about, is not necessarily premiums in force and clients, which I just stuffed up by talking about. It was more our claims. So I've been on a journey on the last maybe 4 months, contacted every BDM for every insurer and said, hey, can you come back to me and tell me what our total claims paid since we commenced with you are? And then we also track our annual claims. So last year we did about, the year before last, so FY22, we did about 37 million worth of claims in that year. The year just gone, we did 27.8, and excluding Resolution Life because I can't get the claims data out of them, or AMP, we're 428 million in claims from inception. Doesn't necessarily include the pro bono stuff because we've just gone directly to the insurers, and it doesn't actually, now that I think about it, thank you, it doesn't include all the pro bono work and the work that we've done with super funds as well.
Yeah. And I mean, look, people are like, $50 million worth of premiums, they're big vanity metrics. And I think that's kind of your point is, let's not look at the vanity metrics, but let's look at the end result, 428 million in claims, not, obviously excluding the, super covers and all that stuff.
Yeah.
But like lives insured, in terms of that hard number of 8,000 lives insured, is 8,000 lives insured. Like, there's naturally going to be that end result of, well, the reason we do all this is because we provide certainty of claim and, and that's the end benefit. But you can't have the $428 million unless you get 8,000 people insured. The premiums are the premiums, whatever they end up being. But 8,000 lives insured is like, amazing to be able to do it.
We did a litmus test on the happiness levels of our clients and satisfaction levels. And so I think about 12 months ago, I got all our staff to call, I can't remember the number, maybe 80 clients each. And I said, look, don't call them for any other reason, just to call them and say hi. Just find out how they feel, what they think about us, all the rest of it. And from the 1,000 calls, we had 2 bits of negative feedback. Absolutely happy with that. We recently licensed with Australian Unity. They do a lot of work around impact and social wellbeing to the wider community. So I'm actually doing some work with a company, I think they're called SVA, and it's measuring our social impact to the Australian community. They've got all sorts of metrics around, right, if you've got this many clients, this is the claims that we would anticipate, and just talking about what the empowerment is and the actual economic well-being to the individuals. All sorts of measures. I'll have that in the next couple of weeks, but they've said initially we look like we add about $40 million worth of, I guess, well-being and happiness to Australia, which we're really, really proud of and really happy with.
Yeah, and that's, I mean, it is interesting. Going in risk only as a business owner, I went holistic into risk only. Like risk is the ugly cousin of the advice business. Let's just call a spade a spade.
Yeah.
A lot of advisors, the investments are sexy, the complex, trust structures, self-managed super, all of that's really sexy. But the ugly cousin is insurance. And because really at the end of the day, we sell a bill. Hey, here's the premium that you're paying every year.
Yeah.
And then, we have difficult conversations with clients about maintaining that cover, reducing it, what is right. For one person, we may be telling them to keep cover that they don't need. And for another person, we may be kind of facilitating a cancellation that they really will need. And so it is a difficult business, the ugly cousins, but like that's what it's great doing that type of work, is looking at like claims, looking at, you know, the overall well-being of our clients. And I'm nowhere near the scale that you guys are playing at. But yeah, we look at just like in terms of client satisfaction, we basically ask every client, how do they find the process? And, you know, we get candid feedback in terms of, hey, it could have been better in these areas, which helps us improve. But it's also like the majority of people are just like, oh, it's so good just to have this insurance in place. It's something we don't want. Like, no one wants to have insurance, but it's important, and it helps people kind of, you know, feel more comfortable about living life. So yeah, for me, like, yeah, I know you don't like the vanity metrics of 8,000 clients and 50 mil, but for me, 8,000 clients is 8,000 individuals insured. And that's something to, you know, be celebrated. All those other feel good metrics are great, but I love the fact that we've got 8,000 people insured.
Yeah. And I sort of challenge anybody to say, you know, I know superannuation is sexy and it's really easy. It's growing, you know, with superannuation guarantee and all the rest of it. But for me, the most impactful things I've ever done in my career are sad, but also really good, you know, bittersweet, I guess you would call them. So sat across the table from a man that was diagnosed with brain cancer, knowing that he wouldn't be there in 3 months, and sitting down with his wife, who made me chicken sandwiches, and we talked about the insurance that was put in place and what it'll do for them, and having the both of them crying, you know, and I ended up crying during the meeting as well. That sort of happens maybe once every 6 months. And it's just a really powerful, wonderful thing that we do, bringing, I guess, a little bit of happiness to what could otherwise be, or what is otherwise a sad event.
Yeah, one of our team members actually just got a trauma claim. Now she's healthy now. It's all good story. But I was, you know, we all work virtually, but now we've just got an office and we sit next to each other probably once or twice a week. And I was sitting behind her when she got the email from Tao saying her trauma claim was getting paid out, because we weren't sure if it was going to be a partial or whatever was going on. And she got a full claim, and then she actually recorded a video telling her husband. So she didn't tell her husband. She paid off the home loan because her husband was very conscious about, we need to get rid of this home loan. Yeah. She paid off the home loan and then gave it to him. And so she recorded it, you know, in her home office, showing him, and she shared it with our whole team. Like, hey, this is me telling, you know, my husband that we paid off our mortgage from this
Mm.
trauma claim. And that stuff is just, you know,
but it's magic.
You know, very powerful. So that's a good sense of the business. Now, I'd love to know, you know, given you've got a huge in-force book, a huge amount of clients, like what percentage of your time is kind of just managing existing clients with their, you know, concerns around premium re-rates versus like going out there and getting new clients?
Yeah, I think like most risk advisors, too much of my time is spent on existing clients. I'd much rather be out talking to new clients. As a business, we've got some advantages, I think, versus most others. So we have a full-time claims manager. So our advisors, you know, if they so choose, don't have to be involved in that because we've got an expert in-house. Likewise, we've got a big admin team. But I would anticipate maybe 3 days a week, our advisors are out talking to new clients, and 2 days a week, they're dealing with in-house stuff.
I mean, that's pretty impressive, even that as it is. Is that because a lot of you've got a big admin team who are managing that day-to-day kind of premium issues, or, you know, whatever the admin issues are?
Yeah, that is 100% it is. So sort of shout out in our business to Sean Shaw, Angela Liu, Rose Miller, and a few other people that have been instrumental in really improving our processes. And I like to think that we're sort of at the top echelon of systems and processes. And it's because of that we can work on the ratio of having our guys out talking to new people 3 days a week and in-house 2 days a week. Without them, it'd be sort of 4 days, I guess. Yeah, I don't know.
And what would your advice be for someone who's looking at doing I'll call it a joint venture, kind of what you've done with Austbrokers? Well, you know, we don't need to get into semantics about the actual mechanics of it, but what would your advice be to someone who's looking at, you know, partnering with advice firms to work with them in the insurance only space?
So the key thing I would say is that you want your referral partners to be your advocates, and the easiest way to get them across the line is to make them your personal clients. So get your financial planners, your accountants, whoever it is that you're working with, get them to be your personal clients. Take them through the full process, ignoring fees for a second, charge them the full commission rate. And then if the commercial arrangement is that, you know, there's going to be rebates or whatever, make sure that you're charging the full commission rate and give a little bit of the commission back, because every year that you're giving that commission back, it's a reminder of the relationship and the service that you provided. And if you've got that referral partner, just call it an accountant, for example, as a client. When that accountant is then talking to their clients, they can say, go talk to Phil. He looks after my stuff. There is no better endorsement than that. So that would be the first thing I would say. And other than that is make sure that you've got your processes down place and they're sort of documented somewhere, so that if anybody asks from a referring partner point of view, you can sort of talk them through how the process works.
Yeah, cool. And so we recently connected. We got an introduction around. I met an advisor in Perth who then connected us after we'd already been connected about kind of you're trying to have a concentrated voice about some concerns with regards to insurance with insurers. Help me understand kind of what are you doing in that space?
The peer group. I was at a Zurich advisory board meeting maybe 2.5 months ago, and I was just talking to some of the bigger practices, just saying it's frustrating that we as the industry leaders in life advice, right? So the industry as a whole has not done well, but I think the top 10, 20% of life advisors have actually done okay or even excelling during this period. And so the idea would be that if we can get together as a collective, have a cohesive voice back to the insurers about what we want, then hopefully we can make some headway and get them to better understand the things that we can do and they can do to help grow the industry again. The easiest one that comes to mind, and this is sort of the starting point for the conversation with the advisors, would be about initial year discounts, right? And the biggest one we all know is BT, which offered 50% discounts in the first year. And at the same time, they were cutting staff because we all sort of knew they were going for sale. Now, I was talking to, I think, AIA about upfront discounts, and their feedback, and the same feedback from Zurich, was, you're right, advisors continuously whinge about upfront discounts, but the second we offer them, we get a massive uptick in business. And I think the important part of having this group together is getting the insurers to understand that as an advisor, we sort of wear two hats. You go, right, one, every time I talk to a client, I'm engaged solely with that client, and any other consideration goes out the door. My number one priority always is what's best for this client. I've got to follow best interest duty. I've got certain rules and processes that I have to follow in order to give the best advice. And then if insurer is offering a 50% discount on a premium, I can't help but look at that. Despite the fact that I, as a business owner or as a person with specialist knowledge, knows that it's destructive in the long term, knows that this is going to cause issues in later years, it's cannibalizing portfolios, all the rest of it. As an individual advisor with an SOA that I need to give to a client, there are either some significant warnings I have to give about it, or it's just the fact that I have to look at that BT policy because I can't ignore a 50% discount. So if we could get all the insurers, for example, to either restrict or abolish initial year discounts, I think it would do a lot to improve our ability and clients' ability to maintain and have healthier policies over years.
The thing that I don't understand is APRA, when they made these interventions about sustainability issues, got rid of agreed value, changed income protection and did all their measures. One of their big things in their white paper that they were very, very clear cut on was these initial discounting. APRA came out and said, we do not like initial discounting. Now, I, for the life of me, don't understand why APRA didn't make that a requirement. If you're going to do an initial discounting, well, your capital requirements are going up by 5 times.
Yep.
Because we know it's unsustainable. Everyone recognizes it's unsustainable. But you're right. As an advisor who is under the best interest duty of that individual client and not under the best interest duty of our pool of clients, we can't not consider it. And so, yes, there are the advisors who may just not, kind of grasp who's doing discounting here and there. I've got my quote comparison. Yep. Let's pick the cheapest. For sure, there's that. But you're right. We've got this best interest for the client sitting in front of me. It's like when we've got, what could potentially be unsustainable underwriting, we're not going to get an exclusion when we know everyone else is going to offer it. Well, guess where I'm writing my business? As much as we can question the sustainability of those underwriting decisions, that is where we're going to place our business because we've got the best interest of that one individual client.
But I guess the advantage of what we're trying to do here is that it doesn't necessarily involve the government or anybody else. It's just direct conversations between the leading risk advisors who are sort of growing or at least really profitable at a time where the rest of the industry is failing. It's just us as leading risk advisors and the insurers. just direct, honest feedback about what would be better for them and for us, and ultimately what is in the best interest of our clients, the Australian public.
And that's one thing I've tried to do more, as we're growing and writing, more new business premiums. One thing I've tried to do is actually have a collective voice within my own business. So we do surveys every year, and we basically survey the whole team and say, where does every insurer rate in terms of their administration, managing policies, their underwriting, their, I think there's 10 different data points we get the team to do it, just so we can not, because one thing with insurers and advisors, when we have one small issue, we then go on whinge and knock down the door and, say, hey, we want this to be done better. But insurers can kind of ignore that. Oh, well, that was just one small stuff up we made. But what I've tried to do internally within my business to go over a 12-month period, how do we view you guys? And then give that feedback back to them, every 12 months. And we're thinking about doing it on a more regular basis. And the thing I love about what you're trying to bring together is it's not just, the big firm with 50 million, 8,000, policyholders. It's you're trying to bring together $1 billion worth of premiums together to say, hey, we're not happy about this, or let's have a discussion. Let's sit down because we know your points of view. Like the specialist advisors, we understand why insurers do what they do. Like it's not a surprise why they do upfront discounting. It's not a surprise when they do A, B, and C. We all get it. We've all had these conversations, but how do we change it? And that's what I love about kind of what you're doing and bringing together the biggest riders.
Thank you, Phil. Right. And I think it's important, you mentioned before about those advisors that maybe write a couple of policies a year. I think it's incumbent on us as industry leaders that we provide this direct feedback, because the guys that write one or two policies aren't across this sort of thing. So, by us making, I guess, a more concerted effort to make it sustainable and growth focused to the entire industry, I think we'll see more and more advisors coming back into it. And that's where the pain points be, right? So the leading risk advisors are writing about the same amount as they were a couple of years ago. It's just the guys that are writing sort of one or two policies, a lot of them have dropped off the books. And if we could get them writing again, then
why would they? They're getting re-rate notices. They don't know what's going on. They're getting declined because someone went to a psychologist 3 months ago, and we're getting declines now. Like it's kind of like if you're writing 10 policies a year, it's bloody annoying. When you're writing 500 policies a year, it's bloody annoying.
So selfishly, that volatility has been great for our business, and I'm sure it has been for a lot of people listening to this, because it means you could partner with financial planners. But I think this position of privilege that we now find ourselves in as risk specialists comes with quite a bit of responsibility as well. And that responsibility is ultimately to the Australian public, but to our peers and to the industry as a whole. So hopefully this group, with the right level of support and right engagement, we can actually make some inroads into improving everybody's lives.
Yeah, and that's right. And I was having a chat with one of the insurers today, the heads of, and basically saying, like, if QAR comes in and you guys can give advice, my recommendation to every insurance company is go and do it. Because when they do it, they then pump marketing resources in. Then more Australians know about insurance, and then they'll go to those insurers directly. But when they want the mortgage broker-esque type of relationship of, hey, I'll come to you because you'll source the market and tell me what to do, then it's only going to grow the pie, in my view. I don't know what you think about insurers getting back your advice.
Bit controversial, mate, but I don't disagree with you either. And like super funds getting into advice, part of me thinks that the government's right. Like, there's only 16,000 of us. We can't service everybody, and ultimately there are so few advisors that I can't remember the last time I came up against another advisor in a conversation. So I think the more people that enter this market, the more people that are going to be insured, the better off it'll be for all the incumbents.
That's right. And I mean, look, the insurers will bugger it up, no doubt, and they'll make mistakes. But it's the good thing is they've got a bigger marketing budget than you or I do. So they can at least market direct and grow that pie at the very least.
Yeah, correct.
Because when they do bugger it up, then the clients come to us to actually get them, source where they're going to get the cover from.
Yeah, I mean, ultimately, I think if you add the insurance. The insurers providing advice, super funds providing advice, like the more the merrier, really. And I think where we're really missing out is in the schools. It'd be great in grade 12 or grade 11 that there's a mandatory life admin course where you learn how to do a tax return. You learn what superannuation is. I I remember at the time I graduated with a funds management degree, and then my first job, I was working in Brisbane. We had the union representative come around and say, "Oh, this is your super fund." I said, "I don't want super," and he had to explain to me what it was, even though I was 2 years into a finance degree, which is kind of terrifying.
My first job in a financial planning firm, I got a pay rise that went over the tax bracket, and my first thought was, I'm going to take home less money, and it's like, hold on, I shouldn't be having those thoughts if I'm getting into financial advice. But it's true. We've just got no bloody idea when we leave school and we get into these.
Matt, I think we've just talked every potential client out of talking to us ever. So yeah,
mate. I mean, but everyone's had these thoughts, these life admin that we don't get. Like no one's getting insurance. People don't think about it because, well, isn't it in my super fund? Well, yeah. Guess what? Have a look how much you've got. $135. It's not going to do too much. All right. So I'd love to hear kind of your opportunities that you're seeing in the market. Like, what does the future look like?
So are we talking to risk specialists or just in general? Ultimately, the market's underserviced.
Overall, in terms of financial advice, but then also in the risk space.
Yeah. So financial advice, I think, if you're still in the game, you've obviously gone through the worst of it. And I quoted this at a graduation ceremony saying, we've not only survived, but we've thrived. So if you're still in the game, you're a financial planner, then it's very rosy outlook. You got superannuation guarantee. We've got some of the largest funds in the world. Our superannuation system, I think, is ranked 4th in the world in terms of transparency and efficiency and all the rest of it. So massive opportunity. And then if you're a risk advisor, a specialist, then I don't think the world's ever been better. They just passed the 10-year rule the other day. So we've got a couple of staff members that are really happy about that and are just going to now be operating for the next sort of 20, 30 years. So if you're a risk advisor, go talk to some financial planners, go talk to some accountants, get yourself learned about estate planning, beneficiary nominations, all the simple stuff, because there's lots of opportunity there to do the right thing by your clients. And if you're a holistic advisor, I would encourage you to start looking at risk a little bit more seriously, because I think Elixir Consulting did a really good survey not too long ago. I think they had a couple of hundred practices, and it quite clearly demonstrated that those holistic practices with exposure to risk were significantly more profitable than those practices that were purely financial planning.
That's a good stat. And what does the future look like for Austbrokers Life?
More of the same, mate. So we've grown pretty substantially. I've got ambitions to get to, again, I shouldn't talk about it, but I've got ambitions to sort of double the size of the company in the next 3 years. And we're in conversations with a couple of people at the moment to, I guess, keep going on that journey. But I just think it's a wonderful industry, and the company that we have at the moment is doing a really good job by our clients. So I'd like to do that. I'd like to get more involved in the pro bono work we do. We signed an agreement with the Cancer Council where people that have suffered from cancer and can't manage their own paperwork with the claims, we step in and do that. So the more that we can do that, I think the more that we can give back to the community, and the better off we'll be as a group.
Yeah, amazing. And it's a little bit on the nose to have growth plans for the growth in claims management. I think to say we hope to have $1 billion in claims paid is a little bit less exciting to say. But that's why again, that's why I say lives insured is amazing. Getting that number up, Australian wide, let's increase lives insured.
Yeah, I guess if we go back to the number of families we help.
Good. Yeah. And then, yes, the number of families who you can help assist with their claims when they happen, because they happen. If you've got a cohort of 5 clients, you may never see a claim. If you go cohort of 20,000, well, you're going to see a bigger number, and you're going to be able to support those, and you've got the scale in your business to be able to support. Like most advice firms don't have the scale to have full-time claims management people. They don't have the scale to do pro bono work for the Cancer Council. Like that, that only comes with scale in size. So thanks heaps for jumping on. I do have 2 final questions for you. When do you get a chance to do your emails?
I did good half an hour this morning, which is good. And I'll do another, maybe 2 hours a day, 3 hours a day.
Yeah. And are you in there all day, like kind of just tinkering all day, or you like set aside time?
No, I probably don't manage my calendar very well, and I think everybody listening from my business will attest to this. I think I called MetLife the day before yesterday. So I think 3 p.m. the day before Melbourne Cup, and I said, hey, the team have forgot to remind me that Melbourne Cup was tomorrow. Are you doing anything? But we have fixed in meetings with our advisors, fixed in teams as a collective. So we do 1 hour meets every week, and I'd say half the day I'm on the phone now.
Yeah. And what's one interesting hobby that you have?
I've played rugby union my whole life, and I broke my back about 5 years ago. So I thought I'd go play with the Warringah Rats about 3 years ago, and learned very quickly that at 35, you're not quite 23 anymore. And I got cut in half by some bloke that I found out later played for Australian Sevens. So sporting hobbies are minimal at the moment. It's probably surfing, if anything.
Yeah. Awesome. Well, mate, thanks heaps for coming on. I really appreciate it. And, great job with what you're doing with Austbrokers Life, with the Cancer Counsellor, 8,000 lives insured, and also not even just building your own business and building your own practice, which takes a lot of time, effort, energy, but also taking the time out to form a group who could have a really positive voice and not start with a complaint and go, hey, we're here to whinge to you collectively, but let's have a conversation. We all want the same outcome. We want premium sustainability. We all want the same outcome of helping get more lives insured. You can't do it without us. We can't do it without you. So let's make it better. And
let's work together.
That takes a lot of time, effort, and energy from you and your team as well to allow for that. So thanks for all the work you're doing.
Well, mate, reverse back to you, mate. Thank you very much for being a strong voice in the community. I know a lot of people that refer to you and say that they love listening into these podcasts, and I certainly do as well. So, mate, thank you. You're a great voice, great advocate for what we do.
Thanks, mate. Thanks for your time.
See you, mate. Bye-bye.
If you've enjoyed this episode and you think someone else will get value out of it, I'd love it if you could forward it on to them. And as always, we can continue the conversation in the My Risk Advisor Facebook group. All you need to do, open up Facebook and search My Risk Advisor, and I'll see you in there.